And Paul, just to check your designation, it's Managing Director and CEO of Pan Asia Metals, right?
Chairman and Managing Director.
Chairman and Managing Director.
Yeah.
Okay, 3, 2, 1. Welcome to Biztech's CEO Conversation Show. Today, we have an interesting guest from the mining industry. We have Paul Locke. He's the Managing Director and Chairman of Pan Asia Metals. Pan Asia Metals, which is listed on the Australian Stock Exchange, stands at the forefront of the future of energy and green mobility. Now, as the only publicly traded battery metals company with advanced lithium projects, not only in Southeast Asia, but in South America. Now, to tell us more, Paul, welcome to the show.
Hi, Brian. It's great to be here. I'm looking forward to it.
Now, Paul, for a start, give us an overview about Pan Asia Metals and your background as well.
Okay, so I'll start with me. I grew up in Western Australia and then started my work in Sydney. I started with Marubeni trading commodities, and then I moved across to Rothschild trading derivatives and high-yield bonds or junk bonds. And then I moved into project finance at one of the big four banks in mining and then leverage finance. And I learned a lot about companies, company formation, and how to build great companies and how not to build great companies there. So that was a pretty good experience. But I've always wanted to build companies myself. And so I spent a lot of time in Southeast Asia when Myanmar opened up, actually, looking for opportunities in mineral resources. And then we put our foot on some interesting assets in Thailand and the RK lithium project. So, I mean, there's a lot of space in between there. I hope we haven't got time to fill it all in, but that's the basic pathway to where we're at the moment.
And so with Pan Asia Metals, paint a picture of the ecosystem that you're in and your strategic focus and competitive advantage.
So whenever I look at a project, Brian, or an opportunity, I always start with cost environment. So my view is globally, if you're going to build or be involved in something, you want to be one of the lowest cost, because if your underlying market is a commodity market, which ours is, metals or energy, it's volatile. And the only way to hedge against that volatility really is to be low cost. So you've always got a positive margin. So we're very focused on low cost environments, but we're also looking for environments where there's advanced industry. And in fact, Southeast Asia is one of the lowest cost environments globally and has some of the most advanced industrial economies, which a lot of people don't realize. So when you look at Thailand, Thailand's ranked number 23, I think, or about that on the one of the indexes. It's called the the Harvard Business Review or the Harvard Industrial Complexity Index, and I think MIT has them too. And Malaysia's ranked 28. So it's all about being positioned for low costs, access to complex industrial economies, and then being in commodities where we've got an option to move past the mine gate and value add. And that's ultimately where we want to take our businesses, into the midstream chemical market.
Okay, so that's your ultimate goal. That's a strategic goal, essentially, to get into the midstream itself. So currently, however, you've got projects in 3 countries: Thailand, Chile, and Vietnam. Walk us through those, and what's the potential of those 3 projects?
Okay, so we started with Thailand, the RK lithium project. The RK lithium project is a hard rock project, and the objective is to produce a concentrate and then ship that up into the Eastern Economic Corridor, which is south of Bangkok, and produce lithium chemicals, which would go into the Thai's battery and EV industry. We've entered into a memorandum of understanding with IRPC, IRPC is a Thai-listed chemical company, which is 45% owned by PTT, which in turn is 51% owned by the government. The key here is our partners. So PTT's got joint ventures with Goshen and CATL for batteries, and Foxconn to produce EVs. So in Thailand, with RK, our objective is to produce lithium chemicals in Rayong, actually, and then our stretch target is to produce cathode active materials, which go straight into batteries.
And you're in Rayong, that's really the heart of the automotive industry in Thailand.
Exactly, yeah. And so Thailand's the largest auto producer in Southeast Asia and the fourth largest in Asia. In Malaysia, particularly Indonesia and Vietnam, would all like to take a slice of that. So it's an incredibly competitive policy environment to attract EV and battery companies. So it's very dynamic. And right now, Thailand is the largest EV producer in Southeast Asia already. And I think they'll retain that. So the whole Thai business there, I think we're aiming to sort of produce 10 to 15,000 tonnes per annum of lithium carbonate equivalent, so LCE, and then we'll see if we can grow from there. In Vietnam, we've got it's really an initiative to build a standalone lithium conversion facility, which would produce LCE and deliver it into the Vietnamese battery market, which is growing, but also customers in China, Korea, and Japan. So Vietnam is strategically placed, and our partners there are VinES, who is owned by VinFast.
Okay, so literally each of your, and obviously that's a competitive strategy on your part as well. Your customer is your partner, essentially.
In a way, and we want our customers to be open to building our customer base. So in both countries, we're in very low cost environments. So our capital costs will be incredibly competitive. I'm talking, in terms of competitiveness in building a plant in Vietnam, it's almost a third of a typical Western environment. So it puts you ahead, and then your operating costs are the same. So that's Southeast Asia. And then the lithium chemical market in 2022 was around 700,000 tonnes. In 2030, it's forecast to grow somewhere between 3 and 3.5 million tonnes, depending on the analyst you choose. And we want to be part of that. So we started looking at Chile about 9 months ago, spent a lot of time looking at the geology, the politics, etc. And we secured the Tama Atacama lithium project. And the idea is to produce a mid chemical, maybe lithium chloride or lithium carbonate, then ship that into Asia to produce cathode active materials. And through that initiative, we've actually secured one of the most strategic and one of the largest lithium projects in Latin America. And we're actually looking for partners for that now. So maybe one of the EV companies in Southeast Asia or Asia would be our prime candidate.
And so this is interesting because if you look at the broader picture around the EV market, the ASEAN, and I'm going to add India to the mix, is home to 2 billion people. Yes. And it's obviously rapidly thriving, middle class, flourishing electric vehicle market and so forth. Manufacturers also are available in the region and is springing up, including proprietary ones like Mahindra in India. How are you? So obviously, are you positioning yourself really to also partner in India as well?
Look, I think India is one of the most exciting markets. I think it was Mahindra who was producing electric vehicles in 2000, not with lithium batteries, but they were, and it's a very interesting company. And there's a lot of development activity there in batteries, in the two-wheeler segment. Actually, all through Asia, the two-wheeler segment is really an interesting to look at because there's so much variety in brands and there's so much great product. But I am very interested in India. But it's hard to break into that environment, and then geologically, it's a bit it's a bit more difficult than, say, South America. But it's something we're looking at. And I actually always, my stats is 3 billion people, because I always include China. But so it's nearly half the world's population, got the strongest GDP growth rates in this region, in our region. And we've got that massive movement into the middle class. It's a really exciting region. And I personally, the US has its IRA to attract EV and battery producers, and Europe's trying to do the same. And on the ASX, most of my peers are sort of chasing the IRA and, make America great again. My view is Asia's where it's at, and I couldn't care less. It's a great region.
And that's an interesting. The contrarian often wins the war at the end of the day. May lose some of the battles, but wins the war. Now, Paul, let me ask you a different question, and it's really around technologies. You're in a hot space right now. You're in lithium, but the technology landscape is shifting in the EV market. That obviously there has been a scramble for lithium, but then we're starting to see alternative technologies like hydrogen, synthetic fuels, biofuels, sodium-ion batteries. And then also now we're starting to see within the automotive industry itself a massive pushback, because suddenly there's a massive overcapacity in the EV space. What are your thoughts for this, and how are you going to navigate the challenges of the landscape shifting?
Okay, so on competing technology, or for lithium, for batteries, sodium ion is the elephant in the room. But if we look at the growth in batteries, I think each style of battery has its applications. So sodium ion is a heavier battery. And there's sodium ion stationary storage batteries being built, and that, I think that's really good, because if there's too much pressure on lithium, we get the price rise we saw in 22, 23, and even though it's great for producers in a short window, long term it can cause a lot of damage, because you get these massive if we just say EV take up is a constant. So it's sort of like a straight line on the curve. And then you get raw material supply porpoising around that, and you're getting big spikes up and then oversupply and dropping under the curve, and the prices drop. And in that environment, it makes it very difficult to fund a project. So it's not helpful. Also, there's so much demand for lithium. In fact, I think we want sodium ion there for those large batteries, because ultimately, I think we'll have trouble filling that 3 to 4 million ton hole, which moves to 6 million tons in 2050 per year. That's a lot of lithium. So, we want that. Then when I look at hydrogen, my view is that's not really going to happen. I think it's, we hear about blue hydrogen and green hydrogen and all this stuff. It's difficult to ship around. I think Toyota's pulled out of hydrogen, and Nissan have, or largely. So I think that's a done deal. Maybe it can work for big transport, trucks, particularly ships in shipping. So that's where I think there's a good application for that. There is a place everywhere, but I think lithium, there's a reason lithium has been focused on for so many years, and that is because it's light. You can put a lot of energy density in a small place. And then when we move to solid state batteries, which is happening already in China, we're going to find that cars can have much smaller batteries, or can have a lot more mileage. So, I don't think sodium ion is going to take over anytime soon.
Now, when we speak about mining, the space that you're at, and from Australia, names like Gina Reinhardt and Andrew Forrest are household names. Now, you also have in the past boom and bust entrepreneurs in mining like Nathan Tickler. But to put things into perspective in terms of why people are always attracted to mining companies on the ASX, you've got Fortescue Metals as a very good example, where at one point in their history, they were just worth 3 cents. Today, it's about $25. Now, Pan Asia Metals, your history in the last 12 months is your share price today is about 15 cents. Your market cap is around 26 million, but it's about a third of what it was a year ago. What was the reason for this, and how are you looking to turn things around?
Well, Brian, that's a horrible question, but there's a very good reason behind it. So, what's happened in the Australian on the ASX, and particularly in resources, the junior resources companies, and I mean much earlier stage than us. So we're talking, we call them moose pasture companies or projects, where literally it's a block of dirt somewhere, and there's an idea. There might be a soil sample with some metal in it or something, and people will buy into that, hoping that something else is found, and you go from 1 cent to $1. But also so this market is driven by retail investors, and they can be fickle. And what happens is, with interest rates starting to increase late last year and this year, we went from basically zero through to around 4 or 5% very quickly. A lot of these retail investors need to sell out to cover costs, cover increasing mortgage costs, and so on. And then we're in a high inflation environment too. So when I look at the dynamics of our share register, we saw a lot of smaller shareholders just selling out for about 9 months. And this was across, when I speak to other CEOs, exactly the same. And if you put all the resource charts together, they basically track each other. There's a few standouts, with some of the M&A activity in WA, but largely they've all tracked down. So that's why most of the stocks, including Pan Asia Metals, have dropped off. But what we've seen in the last month is a rounding out. So 9 months ago, I was seeing probably 10 or 15 shareholders leave the register a day, and they're all selling 2,000 or 3,000 shares. So literally $1,000 worth of shares. But it was enough to, when that's happening across every stock, it's pretty hard to find someone to compensate. So you naturally drop in price. But that dynamic's disappeared now. In effect, those shareholders which capitulate and sell have gone, and we're starting to see shareholders come in onto the registers, small ones. So I think there's a turnaround in sight across the sector. That's largely the reason. For Pan, actually, I'll jump in there also.
Yeah.
Oddly, at the start of this year, we had the Rionket lithium project only. During this year, we've entered into strategic partnerships with IRPC/PTT in Thailand, VNES/VinFast in Vietnam, and we've brought onto the books the Tama Atacama lithium project. So one would think they're all fantastic events and would be something to push a share price up, but it's quite the opposite when everyone's selling.
So can I ask you then, Paul, how are you funding all of this?
Well, like biotech and technology, we're cash burners. So basically, we're going to market and raising money, which will get us through milestones. And then the objective, generally, is to achieve those milestones, get a revaluation, and then raise a bit more money. It doesn't work too well when the market, share price is coming off. But the idea is investors are coming in, they're looking at the company, and they've got a view that the company is going to do something like FMG. So, make that, they call them 10 baggers. They're looking for their 10 bagger. So it's really, really a cash burner, and we're funding from shareholders as and when we need to.
So you've, I think, got just under 3 million of cash left in the books. How long will that give you a runway for before you need to raise more capital?
Well, we can, because we're in Southeast Asia and Chile, and because our projects are located in strategic places, so we're not at 4,000 meters in the Andes, or we're not out in the middle of the forest with no roads and we need helicopters. we can operate quite cheaply. So our burn rate to do some basic exploration and turn the lights on is about depending on what we're doing, $1 to $1.5 million per quarter. And then depending on what we need to do, we raise more money around that to do more exploration. So it's actually quite low. And the idea is that if we manage that well, then we can achieve a lot on not much at all. To give listeners a bit of an idea, if I was operating in Australia, doing the same thing, my burn rate will probably be around 5 million a quarter. So it's a lot different where we operate.
So do you have any new strategic investors in the pipeline that perhaps will give you a longer runway in order to then fund all these projects?
Yep. We're always talking to investors and we're looking for the right investors. So I think a lot of companies in our space, the mistake they make is they need money. They just go and sort of go into the market and spray it to anyone. And you get what we call flippers. They come in, they make 10%, and then they get out, and your share prices always struggles. So we're looking for strategic investors, particularly for our Chilean project. We want to bring a strategic battery or EV OEM in there because it's one of the largest projects in Latin America. So the idea is if I can bring in the right strategic investor, we'd effectively be fully funded.
Okay, and Paul, for that investor, what sort of capital is required for that project in Chile?
Well, typically a project in Chile to develop, assuming success in your exploration endeavors, you could turn with $10 to $15 million of exploration and feasibility work, you could turn something that was not much into $300 or $400 million of value at least. So, for instance, there's a company called Lithium Power International. It's got a project in Chile. It's effectively its own asset. And Codelco just paid $385 million for that company. And we estimate that the total amount of feasibility work done on its project was between $10 and $15 million. So that's a pretty good return on investment.
Yeah, absolutely. And that's really the attraction of investing in a mining company, isn't it? It's yes, high risk, but it's very high return as well.
And actually, this is Brian, I talked about at the beginning about focusing on low cost economies. And so when we look at a project, and I think investors should look at least three basic elements. One is grade to a point, but more importantly, it's your metallurgical results. So conversion of what you pull out of the earth into whatever you're selling, and then your cost environment. And if you can get those three to line up, you'll always have one of the best projects. If you can't get any of those, and as an investor and you're looking at the company, you can't see answers to any of those three elements, run for the trees because it's not going to work. Yeah. So when we look at exploration success, we spend a lot of time on that trifecta of considerations. There's a lot more behind that, and the idea is that when we make a decision, we're not looking to invest our shareholders' money hoping for a result. We're pretty certain we're going to get the result we want.
Paul, it's been a fascinating conversation. I've really learned a lot, and it's just set my mind thinking of opportunities for this company, which I think are fabulous. Of course, there's a lot of risk ahead, but I think that there's great opportunities. Paul, before we leave, any final thoughts you'd like to leave the audience with?
Yeah, well, I'll talk a little bit more about Pan Asia Metals. So the whole objective of the company is to position the company for midstream chemical manufacturing opportunities. All of our projects are located in very strategic locations. And if investors are interested in looking at the company, I suggest they have a good look at our new project in Chile, the Tama Atacama lithium project. It is the most strategically placed lithium project in Latin America. It's on the coast. It's one of the biggest projects, It's got some of the highest grades. And we're incredibly excited about this project because we can see that project producing a lot of lithium chemicals for processing in Chile and also in Southeast Asia or Asia. So that's where I want to leave it.
Paul, I've learned so much. Thank you very much for taking your time to be on the show.
Thanks, Brian. I've really enjoyed it. Thank you.
Now, we've been speaking to Paul Lockley, the Managing Director and Chairman of Pan Asia Metals. I'm Brian Fernandez, and you've been watching and listening to Biztech's CEO Conversation Show. This interview will be on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.